this is Raman Gill. Welcome to episode 54 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at another different thing that's not your typical technical analysis. We will take a look at how some of the fundamentals drive the market prices, and in this case, we are looking at the CPI numbers, also known as the inflation numbers. We'll take a look at what happens when the inflation numbers come out positive or negative and what impact that has on our prices. As always, we'll take a look at where to enter the trade based on this information, where to place your stop loss, and how to exit the trade with a profit. Let's go on to the charts now. We're looking at the relationship between CPI and currency prices. CPI is the inflation. This is how fast a basket of good goes up in price. Every country gets this number, and usually it depends from country to country how many goods and services fall in these baskets. However, this is generally basically they're looking at how much an average person would spend every year on things that they need for their day-to-day living. The most central bankers want to maintain the inflation around the 2% mark, and a lot of the monetary policy is driven based on the inflation rate. So if the inflation is too high, that is not good. That means the prices are rising too quickly and the normal person won't be able to afford things that they need there for their daily lives. And if the inflation is not improving, that would mean that it's actually bad for the economy, because that means the wages will be lower. People are not making enough money because businesses are not making enough money. So maintaining the CPI number or the inflation number is very, very important for each country, and the central banks work really hard towards maintaining the CPI. Since the financial crisis, the CPI has been, or the inflation has been very low, and the central bankers have been trying to push the inflation up to make sure that the economy is actually growing. As a result of that, when the CPI number comes out positive, we see a positive jump in the currency prices. Here we have a pound US dollar 15-minute chart. Here on December 13, this is where the CPI number came out. As soon as the number came out, we see that the price held above this previous support and resistance area, and as soon as the number was released, price started to move up. The way you want to trade the inflation number is, first we need to look at what the number comes out as. If the number is positive, in this case it was a positive number, we wait for the price to settle down. In this case, we would wait to see how the price is reacting at this support and resistance area. And once we get this bullish engulfing candle here, this is our signal that the price is likely to move up higher now. So we have three different things coming together here. We have positive CPI number, we have support and resistance level that is being held, and we have a bullish engulfing candle. So once the price closes like this, and from volume perspective, we see that we finally have the green volume here as well. So once the bullish candle closes like this, we can wait for a 50% pullback on this and enter our trade long. Our stop loss would go below the low here, making sure we give it some room for the trade to breathe, and then we stay in the trade. As you can see, the green candles are getting bigger here, which is a great sign. And then finally we get a bearish pin bar. Bearish pin bar is a reversal signal. So once we get a reversal signal, we have to be very careful with our trade. At this point, I would exit the trade, even though the price did go a little bit higher, but then we have our R1 level right there, which the price wasn't able to break through. So I would exit the trade here, but you do have an option of staying in the trade and getting to the next level. At this point though, price just hits a wall and it's not able to go through. So we have 1, 2, 3, 4 candles that are closing below our R1 level, which is a strong indication that the price doesn't want to go up higher. So if you don't get out of the trade here, it is a good idea to get out of the trade here, because as you can see, looks like something else came in the market and drove the prices down. So in this case, the relationship between inflation and currency prices is that when the positive CPI numbers come out, the price is likely to go up. So in this case, positive CPI numbers came out for the pound, and as a result, pound went up against the US dollar. So as soon as the numbers come out and we see that the price is reacting the same way, it's going in the same direction, we get our confirmation candle and we wait for 50% pullback and we enter the trade long. Stop loss goes below this level here and we stay in the trade till we get a reversal signal in the opposite direction, which is this pin bar. In this trade, we have a profit of 42 pips or $420 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. You are a wonderful audience and it's a pleasure sharing these trades with you. If you like this episode, please like, comment, and subscribe below. Hope you enjoyed the show today. I will be back with another great trade in the next episode.